Tons of earnings movers this week as the busiest season rolls on. In this earnings exchange, let's get the action, the story, and the trade on three more key names set to report. And we've got to start with Meta. They're after the bell today. Shares are down slightly into the print after that Snap report. In fact, they've even turned positive by 1/3 of 1%. And we're talking about a year where digital ad spending looks like it's going to hit a wall. They recently announced they're cutting 11,000 workers. Shares have dropped in 3 of the last 4 earnings reports. Julia Boorstin has the story today, and CNBC contributor Courtney Garcia, senior advisor at Payne Capital Management, is here with our trades. Welcome, guys. Julia, what are you watching?
Well, there are a couple of key things to watch, especially on the heels of Snap's warning about revenue declines in the first quarter. The key thing here first is revenue growth. What are we going to see here? And what are we going to see in terms of brand advertising versus direct response advertising? One of the reasons why Snap did have the stock struggle so much today is because they are very exposed to brand advertising. Meta is better positioned. About 75% of their revenue comes from direct response advertising, so they may have a sort of more optimistic outlook about what's going on in the ad market. But the overall question is, have these macroeconomic pressures started to relax a little bit in terms of overall ad spending? Have things bottomed? The other thing we're really listening for, Kelly, is this question of whether or not they're really starting to make money from some of their features, such as messaging and also Reels. Those are two opportunities for them to start to generate more revenue and eventually profits from those areas. And then the other question is cost cutting. They did already do layoffs, but will we hear more about where they're pulling back? Are they going to pull back further in this metaverse space? Because that is an area where they continue to spend big.
All right. And Courtney, after a tough run, the stock is up nicely off the lows. What would you do with it here?
Yeah, actually, I do have a hold on Meta, and you actually brought up pretty much every point I was going to bring up here. Some of the biggest things that they're facing are competition on ad revenue, right? I mean, advertisers are going to have to decide who they're advertising with or how much, and I do think that's going to weigh on Meta. They're also still facing regulatory scrutiny, both here in the U.S. and Europe. Their biggest thing is really they're spending a lot more on the metaverse than investors want to see. That very well could be a good long-term play for them, but I think shorter term, we need to see that they're focusing on some of the issues at hand. But there are still some positive catalysts. So we do want to see like how they're doing in Reels, which you brought up. But one thing that really has nothing to do with how they're running the company is just the fact that the dollar has come down. So to put this in perspective, when earnings estimates were set in November, the dollar has come down since then. And by that amount, actually easily could add about $1 billion to their top line just this quarter alone. So some of those things actually I think could be a positive and outweigh some of the issues. So I have a hold on them. I'm not actively buying it right now. I do want it for the long term. So I just keep it.
Yeah, and there we're looking at Meta versus the dollar. It's a good point. Looking forward to that later on. We'll leave it there. Julia, thanks.